I want to understand from your perspective what is going on in a lot of the companies. Interest rates have gone up quite significantly.
Right.
Can the U.S. really dodge a recession?
We can. I don't think it's a certainty because what we really don't know is what will be the effect going forward on the real economy of the large increases in interest rates we've had already. Whether the Fed raises again another 25 basis points, I think, is really not a big deal, one way or the other for the economy. The real question is, what will be the effect over the next 6 to 12 months of the 500 basis points of raising that we've already had?
Why is it taking so long? So usually it translates, what, like 12, 18 months down the line?
Yeah, but if you think about it, we started raising last August, September, July. So we're really in the early part of that 12 to 18 month period of time. And the larger increases have really occurred 6 to 9 months ago. So, there's another big factor affecting monetary policy and interest rates and their effect on the economy is that we had this massive stimulus in response to COVID, and that's been rolling through the economy and it's still being spent. So that's probably mitigated somewhat the impact of the Fed tightening.
So is there a risk that the Fed actually over-tightens and then have to quickly reverse and cut?
I don't. I think the risks now are pretty symmetric. I've been saying for the last 15 months that the risks of overshooting were much higher than the risks of undershooting. And the reason I said that is that the Fed was legitimately and appropriately spooked by the fact that they had overused the word transitory 15 months ago. And so they kind of lost their bona fides in fighting inflation. So that's a terrible thing for a central bank. So they had to do everything possible to convince the markets and participants in the economy that they were serious about fighting inflation. I think we're now seeing real progress on fighting inflation. Inflation is coming down. Labor markets are weakening a little bit. So now I think the risks of over-tightening and under-tightening are asymmetric.
But inflation is coming down, and it wasn't only the Fed, right? The ECB was also saying the same, that it was transitory. Is there a risk that actually inflation's coming down on its own, and so coupled with those interest rates rises, we're going to see, if not a recession, certainly a lot of companies go bust?
I don't know about companies going bust. Well, there's a fair amount of leverage, and rates have gone up a lot. So highly levered companies clearly are vulnerable. Going bust, what normally happens is they restructure, they reduce their debt, the equity holders sacrifice. So I don't think we're going to see anything approaching what happened in 2008. I'm not worried about that. Could we have a mild recession? I think the chances of that are 50-50, 60-40 maybe against. I'm not as positive as other observers of the markets that we're going to escape recession.
Ralph, when you look at also the unwinding of QT, like what's most perplexing actually in all of this? I don't know whether it's market behavior or it just feels like we're not sure where we are in the cycle, and we're not really sure what the economy looks like. I think we've gone from like soft landing to hard landing to no landing to soft landing.
Yes. Well, this is, I've said this before, the most uncertain period of time about the economy that I can remember in my 40 plus years in finance. Not the most scary. No. 2008 was scary, COVID was scary. I don't think we're going to have any kind of a catastrophic event. But, when does the Fed stop tightening? Where do they stop? What effect does that have on the economy? Do we have a recession? There's a phenomenon that I've seen, which I've never seen before. When I meet with CEOs of companies, every one of them says, my company's doing great, but the economy's not doing that well, and so-and-so's company over there isn't really doing that well. I've never seen that. And that's indicative of a high level of uncertainty. Now, with respect to quantitative tightening, so far we've seen a pretty material shrinkage of the Fed balance sheet And longer rates have gone up, but not in a uneven or scary way. I do worry at some point with the Fed coming out of the market as a buyer and the dollar at some point weakening, that it becomes a little bit harder to finance the very large deficits that we have, and if that happens, long rates will go up.
So it's interesting what you say about chief executives. What does that mean they do with investment? So at the moment, they're still hiring. We're certainly not letting anyone go.
Yeah, they're hiring and they're investing in their own business. The implication, I think, is that the business of Evercore, mergers and acquisitions, has been slow over the first 6 months. There's lots of things that almost every CEO wants to do strategically. I would say today they're more actively discussing those things than they were 6 months ago, when there was more a deer in the headlights view about the economy. But we're still not at the point where people are prepared to take big actions on the scale that they did in 2021.
So does that mean underinvestment, or does it mean?
I think we're still seeing pretty significant investment in people's own businesses, and employment is still growing. And I think there is a phenomenon because of the recent challenges in hiring people, the inequality between job openings and people looking for jobs. Companies are clinging a little bit more cautiously to their employees, particularly their high-quality ones, than they might in another uncertain economic period.
Ralph, M&A is a funny thing because you do it in good times and bad times.
Yes.
You probably do it for the good reasons or the right reasons in good times because you want to grow and get better.
Yes.
And get into new market share. You do it, I don't know if it's desperation or to help someone out in bad times. Is there a danger that we'll have a pickup in M&A activity for the wrong reasons?
I don't think so. I think the days of CEOs doing transactions to mask problems in their own business are pretty much behind us. The performance of those transactions has been so bad from a stock point of view that both CEOs and corporate boards are a lot more cautious about transformational transactions. And then, of course, you have the regulatory oversight as well, which the whole antitrust is a little bit more aggressive than it was historically as well.
And do you think when there is a pickup in deals, is it mainly domestic, or are there also going to be cross-border?
Well, I think the whole world is becoming a little bit more onshoring, nearshoring. So the transactions that were designed to dramatically expand a company geographically probably are going to be a smaller share of activity over the next few years than they have been over the last decade.